Good evening. Ira Epstein with your metal market wrap-up. And this wrap-up is for Tuesday. And we're at the 28th of December, 2021, about 6:10 at night. You know, I was just thinking, I'm looking at all the increases. The Chicago Mercantile Exchange issued a whole group of price increases. Everything from quotes to exchange fees to trade, everything. Is there inflation that much? They're earning a lot of money. I'm just mentioning it because I'm taken back sometimes by the amount of increases that we're looking at on some of these things. You don't have a choice if you're going to trade on their platform, and they're the biggest. You got to pay it. That's pretty much just how it goes. I mention that because I heard Linn, the founder of Linn, talking about he was in his Walgreens, and all of a sudden he was buying some wine for his wife, and the price went up $2. Now, it was only a $10 bottle. That's a pretty big increase from what I was listening to him say, and I've run into the same thing as other people. Yet, when we talk about metals, we have to understand they're very sensitive to that. The gold market holding for a change over the 1800 level. Copper's doing very well and holding here at the 444 level. We today had a day where we saw a lot of markets under pressure after stellar gains on Monday. That's that old Tuesday reversal play. So now the question is, what next? When I'm looking at in the energy sector here, the price gains in the crude, I like what I'm seeing. The API numbers today were friendly. They did come out. Tomorrow we get the EIA numbers. They come out at 9:30 in the morning. When you look at the bonds and notes, small gains, not really doing too much. So let's take a look and see where the gold market is. Gold is hanging around its 18-week moving average of closes. That number, 1794.10. Not doing much right here, but that does mean it has an upside bias. When we come and we look at the chart pattern, we had gotten now through this high that I'm pointing to right here. That's important. That gives the market a tilt, in my opinion, to the upside at this point. Now the key is not to get back under 1785 to keep a pattern of higher lows and higher highs fully in place on the chart. Support's going to come in, I think at least, at the 200-day, the 100, and the 18-day average of closes, all above that important 1785 last break level. And the resistance, well, this one I think I've been telling you every day. You don't stay easily over a Bollinger Band, ever. The market had been riding it up, pulling back. But what I do like is that we're getting lots of inflation talk, and inflation is the psychological part that is needed to keep the gold market moving to the upside. When you look at momentum, here's your negatives, and I want to give them to you, both sides. Number one, you're overbought. Overbought conditions, especially in thin markets, don't attract the educated traders that are still there, the non-pro necessarily, but the educated trader from wanting to buy an overbought market, and that's what he'd have to do here. The other thing I'm looking at is we're about to get the bullish crossover where the 18-day average is going to get over that 100-day. It would take a big break to stop that from happening. I am looking for that to occur in the next 24 hours, so that's important. The gold-silver ratio continues to fall, with silver gaining a bit on the gold market. Remember, the lower the numbers go here, I'll come back to that. That means silver's worth more money. You need less ounces of silver to get an ounce of gold. When you look at silver, I think that if you took my courses, this is a classic case, get out of longs. You're hitting the 100-day average, the upper Bollinger Band. I am not saying you go short. I am saying you have an overbought market that is exhausting itself to the upside right here. I know it's the holiday period. Anything can happen in that, but that's a high percentage come out of long trade. In the copper market, you're fighting a battle at the upper Bollinger Band. The market has gone literally from the lower band in December to the upper band, and now you've had a bullish crossover today where the 18-day average of closes is now over the 100. Now, if I come back, you can see that happened on the close of business Tuesday. It's following through now, right through here. That's a sign of strength. The other thing I'm looking at is if we get an embedded reading where the red and the blue lines and the slow stochastic go over and stay over 80 for several days in a row, that'll give me guts to start telling you to start buying in my other updates. That's if it occurs, when it occurs. There's a lot of what ifs. And would it be overbought? Would it be on a vertical rise? There's a lot there. But you start laying the foundation for what you might be doing. In the platinum, you're in a zone where, just like I just mentioned, like in silver, you're up in that area, folks. You can press it. I think the smart people and people taking my courses will be saying, no, that's where I want to take money off the table. That is not the same as getting bearish. That is taking money off the table. Will you embed down the road's the important thing. In the palladium market, we have higher lows, higher high. You had an outside day up today, but it's the same pattern. You've got the 100-day average in the upper Bollinger Band coming in. I hope that you buy it because I want my clients to get out of it up there and take the money off the table. Watch, it'll keep going. Okay, everybody will get mad at me, but it's the percentage play, I think, that the smart money will make. Now, if the dollar index can get itself up and stay over that 18-day average of 96.23.5, and it's at 96.20 right now, that would kick this market from this sideways action that came down, got a bit oversold, now ready to maybe move back up to the 96.66 level. So I'll be watching that to see what the markets can do or what they can't do, and I'll be talking about it first thing in the morning for my paid subscribers with buy here, sell there, right at about 5:40 this morning. I didn't do it this morning on time, but it will be on time tomorrow. Now, the idea here is I want to be your guy in the morning. When you wake up, I want you by 6:30 in the morning at the latest Chicago time to have a video. You can scroll around and say, you know, I'm looking at what I want to do in the metals today. Is Ira saying, what's he saying on that copper trade? Boom. Away it's there. You don't get that on YouTube. You're never going to get it on YouTube. I am not going to tell you to buy or sell anything here. I stick my neck out a country mile in my subscriber videos with lots of recommendations. Even right now, I realize it's the Christmas time, but if the trade rec looks good, why not? You trade smaller. That's what you learn to do. But the opportunity's there. A chart pattern doesn't realize it's the holiday. If you'd like to take a look at all this, it's simple. Go to our website, under the word research. It's all laid out for you there. Is that simple enough? I'm Ira Epstein. You have a great day. I'll see you tomorrow.